Welcome back. Episode 53 of the Ground Up podcast. One of the recent developments has been with a guy called Steve Hamilton.
If this guy has got no assets, he's living off of one loan to pay for another loan. That is the definition of a Ponzi scheme. And if you're going to keep adding fuel to the fire's going to get bigger and bigger.
Can you blame them?
Yes, I can blame them.
Skyscraper proposed for New York City, which would hang an upside down skyscraper from an asteroid. Do we think this is something that would happen in the world?
The short answer, Ryan, is no.
I think someone's been smoking some weed.
That is fucking bananas.
The property market could be fixed with one simple change. All you need to do is have, by default, everyone's house for sale on the market. 40% of people would sell their home if given an appetizing offer.
When the world becomes digitalized, all the searches, everything will be done on a click of a button.
You should get one of those big back tattoos.
My first tattoo, I'm thinking about getting the Bitcoin logo. No, it's you.
Ground up sound, ooh, yeah. Real estate deals. We lay them down, let's get those deals. Deals, making money, baby.
Welcome back. Episode 53 of the Ground Up podcast. Thank you for everyone who's stuck with us for over a year now. In this episode, we are going to be going through some things that are happening in our sector. There's been some controversy coming around about a fella called Steve Hamilton. So we're going to be touching on some of the controversies there. That we're also going to be talking about AI, because there's been there's continuous revelations in AI and its usage in the marketplace, in business and commerce and stuff like that. So we're going to look at a few bits and bobs. We're going to talk about floating skyscrapers as well. There's a trend going around on Instagram from an architectural firm in New York about a genuine floating skyscraper. And we're going to hit on some other bits, talk business, talk shop. So enjoy the episode, subscribe. Let's fucking get into it. But first of all, Stuart, we've not had you on for a few weeks. How you been, mate?
Feels like I've been gone months, mate, to be honest. It's I missed you boys. Missed the pod. Kept up where I can. I haven't watched last week's episode yet because it only got released yesterday morning, and it's just been absolutely bonkers. You know, when you go away I was away for about 12 days, and it feels like I've gone back to like a month's worth of work. So it's snowballing, but holiday was good. I'd like to say I feel more relaxed than I was when I left, but I'm not. I'm absolutely shattered. Taking 2 young kids around the world and trying to get them back on just UK time has been a challenge, but trip was good. Lots of nature, lots of exploring and adventures and stuff. So yeah, it's good. Good to be back.
Beautiful. How did work hold up? How did the business hold up whilst you were away?
Yeah, good. I mean, a lot of stuff was put on hold. Some of the financial things were refinancing Twickenham's about to kick off on literally like 10 days away now from kicking off for that. Just getting some last conditions sorted out with the council. Got Class MA on our vets, which is a smaller scheme. We wanted to eliminate any change of employment before we go for our bigger scheme, which will be done for the summer. We've had a lot of interest in Windsor when I was away. So Windsor, we had a coffee shop, which we're trying to attach some conditions onto their offer, which we said, no, not interested. So we're back on the market. I don't want to say too much actually, but there's been 2 other offers now, which has put us in quite a strong position. And now we're just structuring what we want to do with that. And the lofts we've got a new hire. So Megan's got a new right-hand woman who's helping her. So she's been with me the last 2 days out on the road. I've been like doing an intense course on what the hell Skylofts is and how we operate, how we run. So that's been, she's a lovely girl and she's got lots of questions and she's super keen to learn. But when you're talking for 8 hours in the car, you've got like 6 appointments to run around different sites, show a different.
You love it, mate. You fucking love it.
Full on, mate. It's full on, but no, it's good. It's good. It's only another week, another episode to just get on top of everything, and then and I'm ready to go out tonight. So it's 5. It was 5 to 6 this morning. Showered, good to go. I'm going with another developer we know, Sean, tonight. I'm off to watch Russell Kane with him in Guildford. So it's a full on day. Pick up the wife, out for dinner for 6, and then we'll chill at some point tomorrow on Saturday. So yeah, it's good. How you boys been?
Yeah, Jack, what are you saying? How's life? How's biz? All good?
Yeah, all good. Chugging along, delivering sites. We did an investor open day yesterday, which was nice. Weather came along as well, which is really good. It's good to sort of see the sites progressing. That we're really getting there now with the sort of raft of developments that we're delivering. They're starting to feel like homes. And actually, I think in the next week or two, we're due to have a flurry of sales on 3 of our well, 2 of our sites and some exchanges as well on the other. So I think we're expecting about 15 sales, which is all good. Hiring at the moment, we've had a few people that are moving on and requirement of growth. So back in the requirement the hiring game. So I'm actually looking for like an acquisitions assistant. I know on this channel I've said before my acquisitions guy is brilliant. He's leaving, classic. But you know, it was inevitable. He is great. He's going out to do his own thing. It is slightly different. It's slightly different strategy in property though. But yeah, so recruiting for that might go more down the route of like a town planner, to help more on the planning side than just the sales and number crunching side. Yeah, all good. Good. No complaints.
Banging. D, you got that big purchase through, right? Where is he? D, you fucking all right?
I
Need a coffee?
couldn't, I couldn't.
He was on another tab,
press unmute.
guaranteed.
Yeah, I had a.
He's
I had
doing an
a
email.
with the kid. Yeah. So what was the
Fucking hell.
question, Ryan? No, I'm joking. Yeah.
How are you,
Yeah.
D?
No, look, it's been very intense. I'm in an intense mode right now. We did get the large purchase over, which is cool. So that's a 43 unit scheme that we've got an agreement with the housing association on. So we're just trying to turn that back around now and get into contract with them. But obviously we ran over our long stop date. We were served notice and we had 10 days to complete. It was 1.25 million. So that's done. Good. We own it and hopefully we can just sell it quickly. There's another big deal, a 13 million pound deal that we should have sold last month. Then it moved into this month. Now it's moved into next month. And we just want to get it over the line because we actually got the site manager working for us now. So, and we're just incurring costs. So I just want to get that over. But no, other than that, I brought in a new operations director at the minute as a consultant, working towards being permanent to really just focus on the day-to-day of being that key person, strategic person, stitching all together the day-to-day ops peoples, which is really needed. So there's lots of changes going on in the business, but yeah, it's just really intense at the moment. There's so much when I look in terms of our like forecast. There's so much the swing of key things that need to come in when they should come in versus if they don't come in is literally like nearly £2 million worth. So it's just, and a lot of these things you can't control. You just gotta just keep pushing and chipping away. But yeah, one day at a time, one foot in front of the other. And I came to see you, Ryan, as well.
I was gonna say, yeah, I had D up this week.
Oh, who won the pickleball?
Oh, paddle. We rallied. We rallied in the end. We did a rally, 3-on-2 rally, and I think we ended up doing a bit of a, you know, on the beach where you play bat and ball and you just kind of keep it up over the net. We did a bit of that in the end as well.
Yeah, it was good fun actually. It was really enjoyable.
Doran was fucking on form, yeah. So we drove past. I try and keep a long story short. It's going to be in one of our vlogs soon. But we're in this living room, yeah, and there's about 2-minute walk that way. We drove past this wall, and this wall is like looks like it's fallen over. And we drove past it twice throughout the day. And Dorian every time goes, "That wall's looking fucking dodgy, mate." And I was like, "What do you mean that wall?" And he kept banging on about it. And he's like, "That wall's gonna kill someone." So it was like midnight, and we're in here, and he's still talking about it. We were like, "Fuck it, let's walk to this wall and go and measure it, and go and see if it's actually gonna fall over." And turns out it's pretty bait. There's this tree bowing this wall right near a school where all these little kids walk past. And we were like, he's got a point actually. It's actually quite a dangerous wall.
Ryan lives in an area that's under neighborhood watch, and they've got the signs up and stuff. So when we were all walking around the street at midnight, I was saying that the neighborhood watch is finally out, and then Sonny, who lives with Ryan, is like, "Do you know what? I've never they've because you've lived there for like 6 years now, Ryan, haven't you?"
No, 2 years.
Oh, was it? I thought he was there for like 6 years.
If he's lived there for 6 years, he'd probably moved in when he was like 15.
Oh yeah, I just bypassed all the boy band stuff there. You was in the boy band 6 years ago, wasn't you? Yeah. Yeah. All right. Well, my timing's off. But anyway, the whole time you was there, you never participated in a neighborhood watch activity, but now you have. So the vigilantes are there. The wall was repointed though, even though it's bowing like that. Some kind-hearted individual decided to repoint in the brickwork. Like that's going to do anything. When a monster tree,
They might have stuck a bit of rebar in, D, you never know.
size of that tree, that rebar's doing nothing.
I swear that same night, yeah, so we're in here, we must be chatting for like 4 hours, and there was a good 2-hour period where we're sat here, and Mia, bless her, was sat on that sofa, and, we were talking for 2 hours deep about reinstatement values and calculations on insurance policies, and after about an hour of talking about it, and we found it interesting, and we looked at Mia, we're like, "Mia, go to bed, you're being polite," because she just tells she was so bored.
Basically, it was basically led like when we was talking about that. She basically led like this.
Yeah. We could tell she was there to be polite.
You can go up, mind. You know, we're not done here.
Yeah. You realize how fucking boring you are when we were like, "Oh, shit, we've been talking about insurance policies for ages." They're always quite interesting.
Because I'm coming to see you, Stu, as well, soon, isn't it?
You are, but we have to talk about that, mate, because we've got the full day in, but I might even be able to give you like the morning, but I don't want you to come all the way down for just the
Oh,
morning.
no.
It's just
No.
weird. I'm just saying before you jumped on,
Oh,
man. It's
look at
pretty mental
that.
at the moment.
It's like he's just letting, he's arranged a date, and now he's changing the goalpost.
I'm letting you down slowly.
Now the booze has worn off, he doesn't think you're as good looking.
I know. I'm getting dressed up. You know, I've got the babysitter booked in. I've paid for
Hey, you've got
fucking
4 hours. If you want it, it's all yours. You got from 8 till 1. We can do as much as
I
you
mean,
want.
lads, sort out your logistics of meeting outside of the pod. I just do not want to watch you organise seeing each other.
We'll get our diaries up at the end, D.
We're 10 minutes in. Let's get to one of the first segments because there's before we bring up some of the pre-planned bits, there has been so this is for our viewers' benefit as well. There has been a development in the property training and guru space where there's quite a few. If anyone's new to the property space, you'll find out quite quickly there's a lot of these training people out there, people who generally don't actually do property development. They sell training courses. There's some good ones who sell good practical advice, fairly priced, and there are some good ones out there, but they're far and few between. There's a lot of them that are employing some dodgy financing tactics off the back of these kind of earn and learn schemes and all this other stuff that's going on in the property space. And one of the recent developments has been with a guy called Steve Hamilton on the Property Circles, one of the sort of forums that he runs, and a lady on called Gemma who runs a podcast called Host to Heroes, Hero Host.
Hustle to hero, I think.
She did an interview with him. He ended up storming out. There's a few different questions that were quite divisive, bits and bobs, and then stuff all came out online, came out on Instagram. And now you've got this flurry of investors and students that apparently had been sort of kept quiet by Steve and his legal team, who have given a lot of unsecured loans. It would seem this is, at the moment, this is just stuff that's coming out online. There's a lot of pretty compelling evidence and people talking about it. So we'll see how it unfolds. But it's just another clear example in the space. You've got to be so careful as an investor of who you're trusting people with your money, and trust but verify. And we're going to talk about that kind of stuff now. And Jack, I think me and you, Stu, have you seen this stuff?
I've been away, mate. So I know. Well, I know of Steve Hamilton. I maybe watched like 10 minutes of a YouTube video of him, so I sort of know his face, but I don't know anything else about him really.
What have you seen, Jack? Because you might know a few bits.
Yeah, so I mean, I've never heard of this Gemna Rayat, Hustle to Heroes, the podcast. She hasn't actually recorded or uploaded that. Well, she hasn't uploaded that many videos. She's got 7 podcast videos online. They're actually really good people that she's interviewed. She's interviewed Tyrone Ash, Sean Land, John Lee, Samuel Leeds, and Steve Hamilton. So she's kind of gone with all the A-class celebrities of property education, you could call it. I mean, it's difficult because one person's shine is another person's grind, because you've got her putting on a channel headlining Steve Hamilton storming out, Steve Hamilton exposed. And you have to obviously, I mean, for ourselves, you have to sort of fact check and take it with a pinch of salt, because someone might be riding on trying to expose someone where the exposure might actually be correct or not correct. We don't know. I mean, from what I've heard on the grapevine, it does sound like there is borrowing unsecured money and potentially borrowing unsecured money to pay the borrowing unsecured money back down, which is essentially a Ponzi scheme. But you know, I don't know the details. I actually said to someone that I was chatting to yesterday about this. I find, and I don't know if Stu feels this way as well, I find like the northern property world, like Peterborough upwards, right? So you got Progressive, Samuel Leeds, Steve Hamilton, all of that stuff up north, kind of doesn't mix with the southern property stuff. I feel like we're quite professionally driven, previous experience, but essentially less education in our portfolio and our wheelhouse of income. Whereas a lot of, I feel, the northerners like charging around in Lamborghinis and doing all of the educational stuff. Like I've seen videos of Steve on the top of like a Mercedes Vito, like throwing phones off to kids, and like all of that shit doesn't happen down here. We just get on site, do what we need to do, and go home. And none of this like flaring stuff happens. So we don't. I feel that we don't really mix that much. Like there's not that much related. I don't see them at events and be like, "Hi, how you doing?" sort of thing. It's just very, very divided in that sort of very fighty property educational space. But it's interesting because so to give our listeners a bit of a, we can share the link in the comments or whatever and go and watch the interview. I mean, he does get to the point in the interview where he walks out, which to me doesn't look that great. I mean, I feel like you should always be able to tell how you feel, tell the truth, and be real. Obviously, you may not feel in an interview that it's potentially going the way that you'd want, or the questions are being asked the way you want. But from a transparent and genuine aspect, you should still be able to sit there and answer questions. So it's difficult because in interviews you don't know how it's cut. People say it all the time when they got interviewed by ITV, it didn't cut the recording exactly how they felt it went. So it's difficult, and I think that what normally happens, it's like it's like victims. Once you get one exposure, does then that rattle other people coming out and going, actually, I've felt the same way about this and I'm uncomfortable. So over the next course of the few weeks, we will see that, whether it just sort of peters out or starts, a forest fire. And that's kind of like probably how it would go. Either way, it'll probably, Steve will probably be trying to, keep his continuity of business. Obviously, if he is in the game of borrowing money and people want out, and this isn't great because people will see it and panic. People that have got capital with him, may panic. And I've always been told that I think the phrase is bad news. Bad news would get around the world before good news has even left your house or whatever it is. And that's completely correct. But keen to hear everyone else's views.
I'll just add some context as well, just for anyone who's not seeing this stuff. This is my experience. The Instagram reels that came out started going viral. There was like 500,000 views on one of them that this Gemma posted about the podcast, and they were like cut down in a way that looked quite bad. And that you've always got to have that kind of preconception that if there's a short that's cut down, it could be out of context, and you kind of need, if you want to make pass judgment on it, you should try and see the full clip to get the context. But it looked really bad, and a lot of people were riling up in the comments and all that kind of stuff. The podcast came out. When I watched the full podcast, I actually thought the line of questioning, the way things were positioned, were quite hostile towards Steve in a way towards the end, and I kind of felt bad for him a little bit, because I was like, you're painting him in a light and then asking invasive questions that can only really make him look a certain way. So I do want to caveat that in Steve's defense, that I think the line of questioning on the podcast wasn't done in the best of faith. However, Steve still should have just been open and honest with the answers, and it still kind of looks bad on him by the end of it. Then after the podcast was released, she did another deposition video going into details on company's house, investors she's spoken to, proof of like messages, screenshots, and then in the comments of all this stuff, you've got all of his investors and students saying, but wait, I've lent him money as well. But wait, I've done this and I've done that. So we're not just speculating here. There's a lot of noise online from people within his network and his customers who are saying a lot of this sort of stuff.
191 comments on that video that you're referring to, where it's like a deep dive. I mean, one thing that pisses me off is I've just looked at her channel and her bio is, this is a bit of a side Gemna and Steve. Gemna Wright is a millionaire property investor. Like, I've never called myself that. Like, and they both go by that fly by night, and I just hate that. You're just a property person.
Don't you just find all these property celebrities? All these property people want to be celebrities.
Dorian, I can do one HMO and it's £1 million deal, but
Do you know what? Do
Mm.
you know what? Actually, on some of our shorts and content like that, some like you got the fucking trolls online. They always comment and go, "Where's your 250 million pounds of developments?" Then I looked at company's house, and I'm just like, So we get hit in that same light. You just basically you put any positivity out there, you put any kind of conviction behind what you do out there, you just get shot down by the public. So, but yeah, Stuart and Dorian, what do you make of this sort of stuff in the
I
space?
just find it funny whether these people want to be property developers and actually live a humble life that helps their family grow, or they want to become a property celebrity and they just see the light of this vacuum of wanting to be the A-listed property celebrity with no substance behind it. I mean, the fact that we do this together and that we all get on, I think, is that we're all active property developers. We're in our game, we're hustling, we're doing our thing for us and our families. And all we're trying to do is pretty much give back to other people who want to run down the same path. And I think the listeners that I know that watch this podcast, that's what they love about us lot, is that we're just grafters. We're getting on with it, and we're just trying to share some light between ourselves about our lessons learned and our opinions on stuff. And people who want some help come to us and ask for it, and we're quite happy to give it. So it's interesting. But I don't know this Steve Hamilton. I think I maybe seen a video or two where he's driving around the Lamborghini and it's all a bit chauvinistic and it's all look at me, this is what I could do. But that's their marketing scheme, right? That's how they get people to invest money in their vision and in their goal. And I'm not against unsecured money. I borrow unsecured money off a WhatsApp message, because if you've got an A&L and you've got a lifestyle and a business that will back up the money you're borrowing, happy days. But if this guy has got no assets, he's living off of one loan to pay for another loan, that is the definition of a Ponzi scheme. And if you're going to keep adding fuel to the fire's going to get bigger and bigger. The nicer, newer cars you can buy, but if it comes crashing down, and it will come crashing down, whether it's this year, next year, 10 years from now, a Ponzi scheme can't be rectified, really. It's just a stack of cards, and it is what it is. So I feel sorry for the people who are too naive. People go, "Oh my God, he looks like he's doing great. I'll give him my money." And if you're doing it off a handwritten receipt and you're not understanding what you're actually investing in.
Do you know, it's something interesting. This has got nothing to do with steel or anything that we're talking about in this, but I was speaking to a guy I know, and I've known for probably about 10 years, a London-based guy, was in property, done pretty well for himself, sort of the baby boomer phase, kind of semi-retired, moved a little bit more into passive investments and also investing in businesses. And I was chatting it's like switched on guy, pretty wealthy. I was chatting to him the other day, and he said he invested in someone up north. And this isn't bad shaming the people up north. I'm just using that as a variation point of who he where he invested. And he said he lost all of his investment. He invested in a deal up north and lost all of his investment. I was like, for a deal to go that wrong, you might as well have been the borrower might as well have died. Like, I cannot actually believe. So if we're doing a development, debt goes up to like 70-80% loan to cost. Obviously the capital goes up to 100% loan to cost. You're normally trying to bake in a 20% margin on top of that. So that's assuming that 40% of the scheme's value has been lost, which is nuts. So, and what amazed me is how badly that particular investor had got into that situation. You thought someone that's been doing this for decades would have pre-qualified that deal, that person, that borrower, to at least recover. The way I see it is if you can always pay your investors their principal back, and actually we've never not paid principal and interest. That is pretty fair. That is there's an element of risk with any form of investment. But that I almost asked. I said, "Can you say that again?" Because I don't actually believe that you put in capital and lost everything.
I hear it quite. I mean, it's actually for anybody listening who's never gone into development, it is actually easier than you think to do that. It's very easy to actually secure a deal and skim over some of the key bits, but the key facts will the chickens will come home to roost, as they say. I know a few people. I mean, to be fair, I've done a deal before that I've fucking lost all my money on, so it can happen. And I know people who have. I'm literally speaking to one right now who's lost pretty much all of his funds, unfortunately, and is might even be somebody else's as well. So it's sad when it happens.
If you buy a house that's 40 grand, you know, it's in the middle of Middlesbrough in a real rough area or wherever that no one wants to live, and then you go and spend 80 grand on it, and the house is worth 60 grand at the end. Is that what we're talking about here? Like, you've got to know where to invest, because we would never lose that type of money in the south.
This is sort of, I mean, I said to the guy, I was like, you know, I want to have a sit down with you and work and see if we can, you know, piece it together. But in my world, let's say I'm flipping a house, and exactly like you say, I'm buying something for 300 grand, spend 100 on it. There's a strong likelihood that I might have to sell it and break even, or lose 10 grand, 20 grand, 30 grand and recover that myself. And that's a bad deal in my eyes. But to lose all of the capital investment is really bad going.
Yeah, like on a development, if you did a like a what do you call it, a lean capital development, where, like, just to say you put 200 grand of equity in and then you geared the rest up. Actually, if a new build development goes wrong, and then you also, not only does it go wrong, i.e., it costs more money and takes longer, but then also you just can't sell it for like a year, and the type of development you've done is a type of development where you just can't refinance either, because the rental stress is just too low for the value it is. You basically snooker yourself into a position where, unless the market is a bit in your favor, you could lose all of your equity. Like, in scenarios like that, it happens. Not to say, no, I'm not justified, but it does. The key thing for anybody listening is, that's the point. Is like, when you get into a deal, you've got to, that there, right? That means you would have gone into that deal knowing there's only one exit strategy, i.e., we can only sell these on the open market for 1.25 million each. Yeah, and you can't refinance them, because the rental is 3 grand a month, and you just won't be able to refinance the senior debt principal, because you've geared it so highly on that. Or you could ever go back onto, if lucky, is a dev exit bridge effectively. But if you can't sell for like 18 months after you've done the development, and the development's also gone over budget, and you end up having to chop the price down, your 20% of equity will vanish, more than likely.
Dorian, what I'm getting at is your 20% profit has to go.
Yeah.
So let's say your bill goes over budget 15% and your GDV's come down 8%. That's your 20% profit gone, but you still got your principal then. Yeah. And then you've then got your equity, the equity that came in. So then you got another 20% buffer. So for that to happen, you've got to be 20% over budget on build and over 20% loss on GDV from your original expectations.
Can I just say that I see that I've heard of this happen. I've heard this happen quite a few times, and the only times I hear this happen is on these social housing guaranteed leases on the Middlesbrough 40 grand properties, where you've got guys, sourcing agents, who just buy them for 30, sell them to an investor on a yield, government-backed guaranteed leases for 110,000, spend 15,000 on it. They're clearing like 30, 50 grand profits. And I'm just like, it's dodgy. It's
I hear it happen a lot with developers, new build developers, because something happens with the cost, which was completely unforeseen, but they've taken the risk on it, and it'll blow it. Like, and also I know developers down south as well, where that's happened to, where they've lost their profit, and they've lost their principal, and they're experienced people. And I can give you names off camera if you're interested, but it can happen. And I think this is just, it just comes back to the point, guys, really, where whether you're an investor or you're a developer, going into a sector or a deal knowing that, it can happen. So let's just look at it when we're looking at the deal. With buying a house and doing a refurb, with due respect, is completely different to going in and doing a proper, a full blown new build development with infrastructure and an unforeseen risk in the ground, where something bad happens, which has genuinely happened to us. Your cost can blow up by 100, 200 grand, 250 grand in an instant, where you just couldn't.
It comes back to this point we've spoken about on the podcast before. Like, let's put ourselves. This is advice for investors out there who listen to this podcast. You have to trust and verify. Something we spoke about quite a few times. And I'll give a good example here. I'll speak for myself. If you come to me for an investment service and you want a HMO, we've got shit tons of data and case studies on HMOs. Clearly, I can deliver HMOs, so you can trust me in confidence. I can't guarantee anything, but it's likely. If I've done no new build developments, and you can see I've done no new builds, and I go, yeah, I'm doing a 7 new build plot development, that's risky, because you're going to put your money into my first project of a kind that I've not done before with my own money and taken those risks, learnt those systems, those processes. And I just think, take this Hamilton, just coming full circle. If you watch his YouTube channel and you see all his online content, they're all little houses and stuff he's flipping around and bits and bobs like that. And if he's suddenly raising money against developments, you've got to think and go, I've not seen him deliver any of those things. And this is a transparent guy showing all of his developments. Why would he not show the bigger ones if he's done them before? That should be the point where you go, well, I'm not going to lend him money on these developments because there's no proof that he's ever even done one. And I think you have to have that lens on when you're looking at developers in the modern age who are on social media. If you don't see them doing developments, don't lend your money to them. I think is verify it by another way. Say you go on a site visit and you meet them and meet the team and things like that.
I was always told by a debt lender once said something wise to me, and that's the art of lending is not getting money out the door; it's getting it back, and it's all to do with the DD and who you're potentially lending with. And I do completely agree with that. You want to lend to people that you could trust with with your kids, or really understand that they've been completely transparent. And if you do smell a rat of them trying to hide anything, it's not. All borrowers have to be is honest, and then it's down to the decision for the lender, and that's is when there's not complete honesty and integrity that it starts to get a little bit difficult in this space.
I had an investment meeting this week with a company that's worth £500 million. They're in 4 sectors: transport, shipping, property, and they want to get involved, but they understand that we are where we are and where we want to go, where we want to go, and they are potentially, if we do a deal, they're going to get quite a good deal to help us support, but they know where we're going and they know where our strengths are. We've explained all our weaknesses and what we want to avoid and our disciplines, and they're quite keen on helping us get to multiple 30-unit schemes. So all the new build stuff, so they are going to take a risk with us to grow, but we're just going to try and take one line of development and just try and perfect it as best we can and just stay disciplined in one channel. But they understand that they're going to make an investment on us for tomorrow. I don't want to do the same thing again and again now. So they have to take an educated risk with investors. It's the same with anyone. If you're doing an 8-unit scheme or a 10-unit scheme and you want to get to 30-unit schemes, you need to go on a bit of a risk reward path with them and do 15, 20-unit schemes. I take an educated guess. If I said I wanted to go and build 200 new build houses on a plot of land, and I've done all my numbers and I think I'm right, that's a lot more risk. That's a lot more risky than like I said, than it would be just to go on the projection of that company.
Like even like new build methodology. So it just is what it is. If you got if any of us have never done anything, then you just don't know what you don't know. So it's gonna be much more inherently risky. And most of the deals where we've underperformed is because we've done it for the first time. And but then the next time we do it, we have the data and it just gets better and better and better.
And advice for developers out there is if you want to be borrowing money at scale on different kinds of projects, well, you should endeavor to do, and we're talking about developments, not like, a buy-to-let turnaround or something, but for developments, you should have put skin in the game on your first few developments first to prove that you can do it with your risk. And then you transition to, well, look, now I can sort of offer this to a wider network of investors. It's just being disciplined. Like
I would caveat that with, I don't necessarily believe the developer's got to put cash in, because it depends on how the developer values their own cash. I would rather lose my own cash, than an investor's money. So that's like prioritization. There's a lot of people in this world that won't give a monkeys for losing other people's money. And I would also rather lose my own cash than resource. And what I mean by that is sometimes people go, well, what are you putting in? I go, well, I'm putting in having floated the 2 years of overheads to get this site bought, including paying my team, taking the risk on it, all my time. So actually, you want me to put 20 grand in, I think I've already put in 100 grand's worth of resource.
Sure, yeah. It's skin in whichever form you can sort of look at it, right? Like either you're on the hook for personal guarantees as well, or you've funded it with overheads and things like that, or you've put money in. I just think you've got to have something in the game.
Skin in the game is the fucking knowledge of what to do. If you're going to bring to the pie the whole game plan, the playbook of going from X to Y to make this sort of return is the resources, the time, the effort, the energy, the sweat, everything you need to do to bring the deal together. That's the sweat. That's the skin in my eyes. Writing the check is the easy bit. That's write the check and expect the return and get updated. So yeah, definitely. I think that, but that comes with time and knowledge from doing previous developments.
But fundraising is interesting one, right? Isn't it? Because somebody told me something once before, and I think it's so correct that you're only um, you're only like successful. You're only right if it works. If that makes sense. If it doesn't work, then you're on. I'll give you an example. We talked about very quickly about raising funds and also raising funds to repay other funds, which is if what you're doing is legitimate and that's called a refinance, which is there's nothing wrong with a refinance whatsoever. I've had funds invested and the investor even before their term, they need the funds back. But if I've taken those funds and I've put them into a deal, and developments can be illiquid, they are an illiquid asset, in my opinion. If you've deployed that money in there, the only way to repay them back, if you don't have reserves, is via a refinance, basically. And as long so you can generally raise funds again to repay them off, and then that funds are in those deal, and then the deal completes and everyone gets repaid. In that scenario, that is perfectly legitimate and everyone's fine. If there's just no underlying asset and you raise the funds to say it's going into something, and then you don't put it into that, and there just is no asset there, there is no prospect of that coming back whatsoever, that is genuinely a Ponzi scheme at that point. And that's where the can down the road will come in. But there's nothing wrong with refinancing debt instruments, in my opinion.
I've got another example about a refinance, Dorian, where people don't have to panic if there is a refinance. We had an investor plug some funds into Central Suites yesterday, and coincidentally, because his investment has got so large, I said I want to give you a corporate guarantee now, so there's a charge on company's house that you're a charged creditor, so that if anything were to go wrong, then you know where you stand. Everyone knows where you stand, and I've actually gone out of my way to say that. But the principle of refinancing and borrowing capital to pay off capital is that investor, we've got capital in, we've got a larger sum of capital to do what we need to do from a day-to-day and any project perspective. And that capital is costing me less than an existing investor I've got on a project. So I can actually pay that existing investor down, even though there's margin in the scheme regardless, because it's about half the cost as a percent to our business.
So is that a working capital loan you've taken there, Jack?
Yeah, it's actually like a family friend who's been sort of plugging money to us just sort of as and when he has it. He's come into some inheritance and put some more in. So essentially, Central Suites works on a few ways of investment. One is JV investment on flips. So we own the asset 100%. They get a second charge. We flip the property 50-50 split like we would in a development. Our HMOs where we've delivered a HMO and kept 100% ourselves, and we the average HMO we're trying to turn around about 25% annualized return on cost per year. So we can borrow funds in at 8% and grow the portfolio ourselves and take the markup, service the interest. And this particular party is kind of retiring, so he wants like monthly income. So we build the portfolio that pays that, and then we pay that investor just a coupon on their capital. And then we also have a separate method, which is where we just do a JV in its own limited entity, where we do a portfolio build with investors. They put in the capital, we build the portfolio. So that particular loan is, into our trading entity, secured and corporate guaranteed by our trading entity, which, by the way, has got over 100 owned HMO bedrooms. And then we just build the portfolio with this capital, where basically leverages capital to build more for ourselves, but it coincidentally pays them his coupon.
Yeah, and I think this is really important because like the theory of business, especially when in our sector where you can only really scale with leverage realistically in today's world as well. Like you can do bits organically, but you can't really, in my opinion, unless someone injects an equity. Let's say you're a standing start, you can't scale this in this sector without leverage. And if you were doing multiple deals and loans are maturing and development deals or projects are going, the dates aren't lining up, which is so common in the sector. You're going to be any developer or investor is going to have a moment in time where they're going to have to raise funds to refinance another investment, whether it's senior debt with a traditional lender or even private investors. And I think as the bigger you get, the more frequent, unfortunately, that becomes until you start keeping a cash buffer in the business and start and putting stuff in yourself. Because even a bank, all the way up to that's just business, all the way up to bank level. Like if everybody wanted their funds back out of their bank any given time, it's called a run on the bank, isn't it? They won't be able to do it. So it's just business. But if people are doing it, and then if they fail, though, this is what I've always found interesting with business. If their business then ultimately fails, that same approach could then very easily be said that what you've done there is illegal. Basically, it's like you Ponzi'd there. But I go back down to kind of what you said earlier, Jack. If the funds are going into a direct asset, that's the key thing. But if someone's raised funds and they don't even own a site, or it is not to secure the site, and they've raised multiple funds on that, and that there is no asset, basically, that there is on the other side of the spectrum, I would say, as it's got every flag of basically like a Ponzi. That, yeah, basically.
Can we just highlight then, because I know me and Stu love banging on about this because it all just points, all roads lead to Bitcoin. But the only Ponzi scheme, the only Ponzi scheme that's been sustainable is national debt. That's the only one that's been sustainable. Keep borrowing from off the taxpayer effectively, and then keep paying down government debt and keep running that in deficit years and years and years and years.
What's unsustainable is creating more debt for countries that can't afford to pay the debt to keep paying the interest. And same with businesses. A business failing is the worst thing for a bank, but to lend them more money to keep paying interest is the Ponzi.
And instead of the Ponzi scheme going kaput, like say Bernie Madoff's one, the Ponzi just gets worse and worse, and inflation goes up and up and up and up, and the devaluation of the currency. So like the things we've been speaking about here in business, where there is like a kind of a cataclysmic moment where it all goes to Pete Tong, that basically happens with our national debt just over a long period of time. People should learn about that. If you don't know about that and you're listening to this, go and learn about it, because once you do, you go, actually, I do need some hedges against the pound, and that's where Bitcoin, property are great asset classes. Should we move on to some other kind of topics? So there's one here, yeah. So I saw this trending on Instagram. It kind of went mini viral. There's an architectural firm in Manhattan that came up with this concept that, in theory, in physics, is actually possible. Obviously, this is not getting built right now. At least I haven't seen any verification it's getting built right now. I think it's more of like a satirical piece on where the future of living might go to. So, and for the viewers' benefit, bringing up some pictures on screen. So, article says Skyscraper proposed for New York City, which would hang an upside down skyscraper from an asteroid. So it just sounds fucking mental.
This is the type of development that we were just talking about, where you could lose all of your investment. Like,
I think if Rye could invest in one development, it would be this one.
All day long. Thanks, though, D, for the disclaimer there. So, yeah. Anyway, I'm going to quickly read this brief piece on what this architectural firm's done here. So, a New York architectural firm is proposing a design for the world's tallest building, Analemna Tower, which would hang down from the sky, suspended by air cables attached to an asteroid. The building will be made accessible by drones. The company laid out in its design, which is nuts. But you can imagine a future like that, where drones are the way you access your apartment on the upper floors of those things. The tower would be constructed in Dubai for 1/5 of the cost of building the structure in New York City, before the company proposes to launch it above Manhattan. Using the Earth's orbit, the company said the structure would be able to return to its same place in the sky each day after traveling between the northern and southern hemispheres. Is this a good idea? I just quickly show some photos as well. There's it hanging upside down over Manhattan. There's it suspended from the asteroid with its cables. And there's it traveling from the northern to the southern hemisphere. I just think it's an interesting, it's a forecast, sci-fi forecast of the future of developments. Do we think this is something that would happen in the world?
I think someone's been smoking some weed of an evening and gone, of course, physics can make that happen, but it's ridiculous. I mean, let's focus on building on the moon first.
I mean, when you say, of course, physics can make that happen, is it of course?
Well, I mean, you got to move the asteroid first. I mean, what the fuck?
yeah.
I think we should pre-vet some of this stuff we want to talk about as well. Like, at least send it through the night before. I mean, how do you get your brain into
It just sounds nuts.
coming up with an answer to that?
Yeah, it just sounds nuts.
Yeah.
I mean,
The short answer, Ryan, is no. That is fucking bananas.
I was going to say, let's clip this, and if in 50 years' time we're still running this podcast on a weekly basis, and there is a fucking floating skyscraper suspended from an asteroid in the world, then it just goes to show that sci-fi sometimes sounds mental, but as technology progresses, anything's possible. And maybe Dubai will do it. Manhattan won't do it, but maybe Dubai will.
Talking about asteroids, have you seen what NASA have found? They found some sort of gold asteroid out there now that they think they can chop up, which would make everyone on planet Earth a billionaire.
It's funny, isn't it, the fascination that we have as humans with gold in terms of, as a precious metal, like, it can't keep you alive, it can't really do anything. It's kinda like money at the end of the day. When you actually start talking about things with logic and reason, you start thinking, "The fuck's this all about really?" You know? So
Oh, I have no fascination with gold. I own none of it. It's a fancy yellow metal. It's a dead rock. But no, yeah. I mean, theoretically, of course, you can hang something. I mean, you could build off of the bloody space station, couldn't you? You could just work out the weights and where it would gravitate, and there would be a defining point.
Japan are pretty they're pushing at least this idea they're going to build the space elevator. I think it's inevitable that at some point a space elevator will exist on Earth. It will be the lowest barrier to entry for getting resources to and from the Earth to orbit. So shit will happen that's going to look really weird in the future. A floating skyscraper suspended from an asteroid sounds unreasonable, but
space harvesting is probably that is actually an industry that I could definitely imagine coming up soon. It's probably what Elon Musk is already thinking about. I mean, that asteroid you're talking about here, Stu, it's been valued at 100,000 quadrillion dollars, and it's made up of fucking gold, iron, nickel, just and it's between Mars and Jupiter. So it is actually achievable. That there with the technology and what we've done now, you could say we could go up there and probably start drilling that if with the technology they have, more than likely.
Carl Sagan and many astronomers since his time have all said for a long time that the first super wealthy, abundant entities, companies, countries are going to be the ones who figure out how to mine asteroids because it's just an abundant of mineral wealth and rare earths that you just can't really access here in such levels. So it is going to be a weird future, man. I just imagine just to finish on it, yeah. Let's just say in the future it's really easy to build these skyscrapers suspended from asteroids, and you can travel to them from drones. That would kind of take the human footprint off of Earth, and Earth would be like, you wouldn't have to have this urban sprawl. You just have skyscrapers kind of sort of all reorganizing themselves in the sky. But
There's nothing stopping us having more skyscrapers now.
No.
I mean, we could be building
Planning.
off, which
Fire
is
eggs.
probably logistically
Planning,
easier.
Jack.
Yeah.
Yeah,
logistically
this would have to go
easier.
to the space planning committee. Oh, I dread to think that.
there will be, won't there? There will be. There'll be a space planning committee eventually.
Well, there should be one now, mate. Look at the space debris, all the shit that's in the atmosphere that's just being left up there. I mean, you'd literally be taking rockets off on the risk that not of blowing up from the rocket, but being hit by another piece of shit that's floating around in the atmosphere.
I think we should get into space drilling. I think that's fucking. Should we just sell all of our properties and go and invest a big drill in a rocket?
Yeah, fuck it. Let's do it. Fuck it, I'm down. Let's raise loads of money for it.
I'm still worried about this wall in Darlington.
George, I'm glad you've said that because you would appreciate the seriousness of it. Yeah, if that was in Henley, Jack, there would be a protest with pickets and a brigade.
It's really funny because you say this, but there was a wall between where my brother lives and where we live, and every time we walk past it, I say to the wife, "That wall's going to fall over one day." So we have the same wall situation, and the other day it got repaired. They had to dig out all the retain, repair it, and so our wall Henley's fine. Just I'm worried about Darlington.
Right, can you upload a photo on the Ground Up Network, mate, so we can all see what this
Yeah, of
all looks
course.
like?
Yeah, speaking of the Ground Up Network, we've got over 50 members now, so thank you to everybody who's joined the Ground Up Network. And just to sort of, this is kind of like a weighting against the training gurus out there. We're trying to offer an alternative for people. There's not tens of thousands of pounds for crazy courses. It's £100 a month, 7-day free trial. We're offering as much value as we can, an intimate space where we can all talk to members of the network and help them on their property journey with loads of pre-recorded content, templates, Excel sheets, all that kind of stuff. And if you don't like it, you can leave the network, no problem. So go check it out. All right, let's go on to AI because this happened about a month ago. There's a company in Portugal, real estate company in Portugal that leveraged AI in their sales funnel, and they essentially massively expedited. It took them, I think, about a year to get it all working. Expedited the sales process for their real estate agency. And they've done over $100 million in sales by using these AIs. It's a brokerage company, and it's just helping them sort of generate leads, qualify leads, do all that sort of stuff. We use that in our business on a smaller scale, but I think they were actually using it to help close as well and classify deals for investors, marrying what kind of properties they wanted to buy in what sort of areas. So not just investors, sorry, for them, it was also just people wanting to buy a home, and the AI would just quickly filter, help their search, make things much quicker, much more effective for them. And that helped outcompete competition, and obviously it's given them a USP. So it's an Israeli startup called eSelf AI has developed a technology that provides interactive AI real estate agents capable of answering questions and guiding prospective buyers through listings at any time. Um, don't need to go on to the rest of it because I've kind of sort of caveated it there. But that's just an interesting development for. So this is real estate agents, so people selling stock. You know, if you've got buyers coming to the forecourt, rather than, well, I'll do a right move search for you, or I'll see what's here and there. It can just go, what's your expectations? This is the best kind of property for you. And then, like, what else do you want? And there's the next best property. I do think that's clearly something that's just going to get rolled out, right? Rightmove's going to adopt this sort of stuff.
That would be rolled out even to properties that aren't even on the market. So if you've got everything in data and you want to speak to some AI agent and say, I want to find this house in this location, this size, this criteria, it should then be able to physically go out and farm every house in the country or wherever it's working, and then approach the people who own it and go, I've got a buyer here for you. They're interested, and they would pay what everyone will sell at the right price. And if someone really wants to buy that house, they potentially would go, oh, I will sell it for that. And that's really where the digital world's going. Is it will just be everything's on the market at all times.
Do you guys watch Rory Sutherland on any podcasts he's done? So Rory Sutherland's an interesting guy, marketing sort of genius, and he speaks about the property market a lot. He's fascinated with the property market, and he thinks the way Rightmove are doing stuff is like backwards for actual buyers. And he said that the property market could be fixed with one simple change. In terms of exchanging hands of properties and multi-generational living and all that sort of stuff. And he said, all you need to do is have, by default, everyone's house up for sale on the market. Doesn't mean they have to sell it, but they're all up for sale. And the stats are that 40% of people would sell their home if given an appetizing offer. But because they don't have it on the market, they're not given offers. So you'd have a much higher exchange rate of homes, particularly for older people who live in these 4 or 5 bed large homes, don't think about selling because it's where they've lived their whole life. But that could actually be better suited for a growing family, or for a young entrepreneur or whatever. And then they downsize, and it would create more liquidity in the market if everyone's home was just up for sale by default. You could put it up at a crazy price.
Surely, if you just negated stamp duty, that does that.
Yeah, we should get rid of stamp duty though.
I mean, well, what, if I go to you, I'm going to sell you my car, you don't have to pay stamp duty on it.
Yeah, it's a depreciating asset, so you wouldn't pay stamp.
I mean, either way, that the principle is free movement in the market. If there was no stamp duty in real estate in England, it would be 1,000 times better from a movement and people downsizing and moving up and moving to different locations and boosting economies. And so I understand what you're saying, that people need an offer. But I also find that could be resolved by just the government taking.
No, well, no, it could, but I think Rory Sutherland's point is just that the psychology of people selling their home is that like, I don't know, one of you owns your house, yeah? You might not think about selling your home, so you've not got it on the market, you've not
Yeah, you
engaged.
get a notification. A notification comes through saying someone wants to offer you £1.3 million for your house because they really want it, and you go, "Fuck, it's only worth 850, but I'll do it." And literally, you should be able to buy a property, and you will eventually, when the world becomes digitalized, on a click of a button. All the searches, everything will be done. It will go through AI, and it will say if there's any. It will basically do a homeowner's summary report. You go, yeah, that looks like a good deal, bang, and then it would make you move. But if that was the way the world was going, the government still don't benefit from people having free movement and moving around. Do they want everyone moving around everywhere? Do they like the fact that they know from census where everyone is, who's paying council tax? They got all this other stuff on us. The nanny state that we are. What would be the benefit of everyone moving around every 2 or 3 years? What is the point of free movement to the government, in the government's perspective? But I do see the digital world. There's a really good new book that's come out called Bitcoin, The Bitcoin Age, which I'm only 20 pages in, but I've got some good points about property in relation to Bitcoin. But exactly that.
He brings it up now with surrender, doesn't he? He's like, bring up.
I don't talk about it anymore. Jack's like, for fuck's sake, honestly, man.
You fucking wear it on your sleeve, mate. Bitcoin all the fucking way.
I'm thinking about getting a tattoo, mate. My first tattoo. I'm thinking about getting the Bitcoin logo. We are a global team, mate. But
On the biggest cruise ship in the world, because you pay in Bitcoin.
in St. Martin, we went past the Bitcoin ATM, which I was so excited to.
No, did you get a photo with it?
I didn't because we were in a taxi and I saw it.
No,
I can't believe this is my first Bitcoin ATM. You can take this shit fiat currency, put it into a machine, and it gives you a receipt with your Bitcoin and your Bitcoin, a brand new Bitcoin address. I was like, that is just beautiful. It's a beautiful thing. Anyway, enough about that. I'm just going to keep my mouth shut now until it goes to like, until we have 100 grand day.
I've never naysayed it. I just said Stuart talks about it a lot.
You should get one of those big back tattoos with the big circle of the Bitcoin sign, and just underneath, have you got any? Just walking around. Yeah. Did you wear your duck shorts after?
I wore my Dutch shorts. Yeah, we wore them twice. We wore them on Coco K and on a sea day, which was good. But to be honest, people go around, all the crew and people, they hide little ducks everywhere. So I didn't actually know when I bought these duck shorts, which is quite cute. But then you had like people dressed up handing out little ducks to the kids and things. But they'd hide them in elevators. They'd hide them in little signs and stuff around. And kids would get so excited when they find these little ducks. And they would like collect them. And at the end of the holiday, people would go around and try and hide others. It's just quite a cute thing. So yeah, it wasn't anything to write about, to be honest.
Would you go on a cruise again, Stu?
I love cruising. The thing I didn't realize is that when I went on the previous cruises, I went with a company called Celebrity, which is a 2,500 people cruise. You meet people 2 or 3 times through your cruise. It was definitely a bit more upmarket, not as many kids. This was the biggest cruise line in the world, or biggest cruise ship. There's about 9,500 souls on board, including the staff. You don't see it's basically a floating city, and it's so big and it's so many fucking kids. I'm not gonna lie, I won't be doing it with kids again. I'd rather go on a cruise I'll only go with Celebrity from now on, and we'll probably do it about the kids. But yeah, I would go on a cruise because it's just a great way of seeing a lot of places over a small amount of time. But yeah, it was exhausting, mate. I ain't gonna lie. Loads of kids between 7 and 15. It was great though. There was fucking skating rinks on board. There was water shows, the best shows I've ever seen, better than the West End production, really. There was what's it called, Wizard of Oz show. There was high diving. There was people who the ones with the legs, all the legs underwater and stuff, synchronized swimming. Yeah, the show was insane. They had robotic arms. Well, I'll send you the thing, but they were part of the show, and these things were like moving things, and like, you know, the spinny wheels that they would do jumps and stuff off of. These shows and had lights on them. They were part of the show. It was unbelievable. So yeah, it was good. I mean, I watched Damiani's eyes at 3 going, what the hell am I watching? And I was trying to say to her, look, all these things you can do, like this, like a careers advisor at 3 going, that if you want to become a swimmer, you can come and do this. You want to do a dancer, you can do this. You want to do ice skating, you can do this. And yeah, it's good. It was good for her to see.
Was it Royal Caribbean show?
Royal Caribbean, yeah. So that was they're all still, there's like 3 of them known. So Celebrity, Royal Caribbean, and Carnival. No, not Carnival. There's another one. Oh, Silver Sea are all owned by Royal Caribbean, and then you've got a few other competitors. So it's horses for courses. People like cheap, nasty, tacky, lots of fun. People like high end, very, very luxurious silver service. And there's lots of different cruise lines in between. But if you like to explore and travel and just wake up every morning with a different view, and you know, and the food's great on cruise ships, and it's very clean and stuff. So it's a bit like a Butlins on water, but not as tacky.
It's like Butlins on water, but it's not tacky.
It's not as tacky as Butlins. I mean, I used to love Butlins, with the boys for the weekend away. Yeah, it's good fun, but
It's a good profitable entity. I said, just seen they've beaten their earnings per share for the past 4 quarters. December 24 quarter revenue 3.76 billion. And what do you reckon the net profit margin percentages without looking it up?
12%.
20%.
20.
big OpEx costs.
So right,
It's
12,
funny expensive.
tax 20. What do you reckon, Stu? Net profit margin?
8.
14.6.
Ooh.
Doesn't surprise me. It
Well done, Royal Caribbean.
was good. It was good. But I really enjoyed Key West because that was a few days. Obviously, we booked flights with points and stuff. So we had a few days to chill at the end of this cruise. We went down to Key West and it was just great, man. It was just really chilled, beautiful marinas. We saw manatees. I never saw a manatee in the wild before. And then at Amity Come Alive, we saw 2 in Mexico. And then we saw 3 in the harbour of Key West. And they were just coming up, you know, enjoying because they have to come up every they're mammals. So they're coming up every 7 to 10 minutes to get a new amount of air. We saw a pod of dolphins and just, yeah, it was great, man. Good evening entertainment out in the Deville Street.
Was it the Icon of the Seas?
Yeah, it was the Icon. Yeah, it was absolutely fucking insane, mate.
Cost 2 billion for them to build it. I reckon. How long do you reckon their finances over that in terms of years?
Oh man, well it was 10 grand for us for a week, and they charge a child the same price as an adult. So even though they're not, you know, and that's all your food included and stuff, but
in terms of asset finance, though, how many years do you reckon they get that amortized over?
Oh, they'll probably make their money back in 2 years.
2 years, you reckon?
Yeah, I mean, they're making a fortune. I mean, how many rooms were there? There was
Yeah, but their
12,500.
OpEx must be high, though. That's 2 billion to build it. Then they've got all the staff,
Yeah,
running
yeah,
petrol, they've got
but I've left.
6,500 rooms paying 10.
Do you reckon the lifespan is like? Do you reckon they give 10-year finance on it?
Sorry, they're doing about 60. I reckon they're probably doing about 60 million, 60 million a week on one ship. If they've got 6,500 rooms and they're charging about 10 grand a room.
Is the food like subsidized cost? Is the drinks like subsidized cost, or is it
You
just
pay on top.
expensive?
So you book and you get your juices and water effectively included with all your food and your buffet and your 20 odd restaurants. And then you decide whether you want to go for like a standard package, a premium non-alcoholic package, or an alcoholic package. So that's like another $400 a person that you pay, and they do you a discount before you get on. The problem with me is I don't drink, so I paid for the refresher package with the premium coffees and all the rest of it. And on Celebrity, the alcohol-free beers were included, and and it was like 30% discount, 3 weeks before you jump on. And then you jump on, then it goes into their normal high ticket price. And then I went to get a first alcohol-free beer. They said, sorry, that's part of the alcohol package. I'm saying, but it's got no alcohol in it. Anyway, it turns out that it was part of the alcohol package. So we had to pay a premium to upgrade from the refresher package up to the...
I'd have just started drinking again at that point.
Yeah.
Yeah, they turn over on average 4.3 million pounds per day per ship.
Would you own a cruise ship? Would you find that an interesting business to run? Or would you just be like, nah?
No, I don't like B2C.
The masses.
Mate, they are insane. I think I would have had the money, and I had so basically owning a big yacht, isn't it? But there's a company, there's Four Seasons, they've got their own yacht now. There's another company that've got these sort of more unique small yachts, which you pay like effectively like 5 grand a person for the week, but you get treated more like you're on a very small sort of 150, 200 people cruise liner. Silver Sea's like a high-end one where a lot of retirees and people who have made a lot of wealth want to go on a 60-day cruise. What an amazing way of seeing the world if you want to go around Asia or Australasia or go and see the Pacific or go around Antarctica.
Advertisement for cruise ships for anyone listening, if you want to go.
Do they have Wi-Fi on the cruise ship?
You pay for that. Yeah, you pay $260 for the...
Yeah, so the thing I'd quite like about a cruise ship is you could kind of work quite a bit and then just sort of get off and see the
It's
sights.
amazing, man. And you can do as much or as little as you want. If you want to go heavy, get in there, drinking, get involved, go to the shows and stuff, or you just do nothing.
A cruise ship that's like, you can live and work there. Like, it's always got workspaces and live there, but just travel the world at the same time. Like, rather than a holiday.
People do that. It works out to be like $120 or something, or $250 a day. But people, when they get older, they go on like these 100-day cruises because it's just cheaper than it is to live in a house where you're looked after, your bed's made, you're catered, your food's sorted out, you've got your online laundry, your pressing, everything's online. It's just people do that all the time. They'll go for 3 months of the year and just go traveling, which I can't wait to do when I'm in my 60s.
It's on the phone, hustling away.
So, if you go round the back of the site,
You'll see the skip.
yeah, you'll see the wall. It's almost going over. I'm really concerned about it. Can you do something about it? Yeah, operations director, thank you very much.
Boys, I've got to go as well because I've got my last MS visit. Oh, we've rented the shop out now as well, which is good, to a little convenience shop.
What'd you get for
For
it?
10%. We wanted 20 grand a year and they offered 22.5. So we're happy with that. And it's a condition of them getting their alcohol license, but we should find out next week and then we can get the lease done and they can start kitting it out. So, but I need to go meet the MS surveyor to get our last payment on that job because it's done. So see that, lads.
Safe one,
next week.
Stuart.
So
Have a
yeah,
good
boys.
day, sir. Fucking lovely. All right, let's go to the last 2 little segments here because one of them very relevant to us. So Coventry just opened the door to limited company mortgages. So Coventry Building Society is also now in the market for lending. And I think there was another building society that did it as well. Was it Leeds Building Society? I can't fucking remember. But maybe there's more appetite coming back to the market. Maybe lending is going to get nicer. Maybe interest rates are going to come down, and maybe they're going to abolish PGs. You never know. But hopefully we see a bit more appetite come back in the market. What are you guys seeing with banks? You seeing any sentiment shift at all?
Not for the construction sector. There's a complete still lack of appetite for funding support there, and the amount of recently I've gone to 20 lenders recently, and not all of them have returned, but a lot of them without even getting to underwriting, they're just saying they're just not supporting the sector at the moment. So like, how can they expect, you know, things to be built or new companies to come forward when they're just basically putting their hands up saying we don't want to touch this sector at the moment. That's what I had a really good conversation with like Alica Bank, for example. They went through our financials, our like what we could offer for security, how much we need, and they was like, yeah, well, this looks affordable, we can do that. And then I give him all the information. Then he came back, said, oh, I've just spoken to my manager because it's construction sector. We're not looking to operate in that. This was in their corporate business lending team, the growth lending team. They are because you're in construction, we're not supporting that sector at the moment. You're like, fuck, that is just a blanket mandate. Yeah, yeah. And nobody talks about it, but it is definitely a problem.
Well, it invites other sources of capital, doesn't it? Like PE capital and big hedge fund capital.
I spoke to Virgin Venture. They don't want to support construction. I spoke to UKSC. They don't want to support construction. These are the ones that specifically said they don't want to support construction. I spoke to BGF. They specifically don't want to support construction. ThinCat's the same. Oak North the same. Alica Bank the same. And then the usual banks as well. Then off the top of that,
Can you blame them? Because it isn't construction the biggest weight in administrated companies.
yes, I can blame them for that.
So essentially, let's say you had a fund, right? And you had rules in your fund, and coincidentally, one of those rules is to discount ever lending to the most administrated entities that you would probably lend to.
Even if that's sorry, Dry, even if that's the case, and what was like I said, understand why because of the news and all that. But from the government's point of view, surely they should be. You can't even access the growth guarantee scheme with any of these lenders. There's no incentive or support from. How can you support house building or everybody? And when and also there's the stats coming out. Construction stats on the decline. The construction activities on the decline. The skills shortages is a huge problem. Lack of people coming in. How can you just say all those bits and then like there's the rule, isn't it? Follow the money. You've got, the whole thing with a capitalistic society, follow the money. Even if it's a case that it is risky, surely there should be some incentives to get some momentum going again in it.
I've always thought of a construction business kind of like a really wobbly manufacturing business, just in terms of the model, because banks are willing to lend against manufacturing, and manufacturing and construction, they're not like massively dissimilar, just that manufacturing is centralized in a controlled and contained environment. Construction has so many variables, different sites, different types of sites, planning, and all these other things that get in the way. There's sort of no surprise that banks don't see, well, that there's a lot of high administrations, but also that banks don't see security in it because it's like a really bad manufacturing facility in terms of security.
Frustrating thing is we're not like a traditional construction company. I class ourselves as a social and affordable house building company, a partnerships company. But the bottom line is because we undertake our own construction works and end up and get a build contract, the lenders classify us as a construction company. And I even had a meeting with HSBC and like, oh, I think this is like really different because you're a social and affordable house building company, and Lloyds Bank the same. No, you're a social housing company. We want to support that. And then the other thing is like, actually, you're a construction company in the eyes of like underwriting.
If you spun out your company, yeah, and you spun it out into the development and land acquisitions company, completely separate from your construction company, would you have better chance getting lending against the development and land part?
There's a lot of funding for development and land bit, but on traditional dev finance type, or even RCF type facilities. But you need they're all looking for like a 30% equity contribution. So like if you had that 30% slice from whatever you wanted to do from an equity point of view, you would get, it's kind of like what Jack's mentioned before, which always fascinates me as well. The lack of funding support compared to like tech-based or SaaS-based businesses is insane. Like we're a traditional business with proven demand that's been around for 100 years and will be around for another 100 years. And then there's other businesses that are literally flight by the night type businesses. The man literally could do, and the aggression or incentives to get much more. Like property development property developers, for example, are excluded from EIS schemes. They're not and if you do construction, but you've got links to development, you're also excluded from EIS schemes, whereas, other businesses aren't. So there's just no incentive really, which causes big problems.
To paint a picture of of exactly what you're getting at, and I completely agree. Why is it so difficult to fund a development company or even a development construction business? In the US, you can pretty much go into most US banks, um, and you could be trading for 6 months, and you could get an SBA loan, which is a small business administration loan, and it could be up to about 50K, and you could have it in your bank account the following month, and you can invest it into growth, rent, staffing, inventory, and grow your own business. To do that in the UK is near on completely impossible. Back in the day when businesses were set up in like the 60s, 70s, 80s, 90s, you could still go into the bank and get approved for a business loan, even on a whim or a prospect. So completely agree. It's difficult. And the easiest way is private investment. Go to someone that's a private investor and say that I want you to back me, or you obviously your own capital.
Or wait for the next pandemic and they'll give it to you for free.
Yeah, bounce back.
Bounce back, baby. This is really interesting. Is what's happening this year? Agentic AI, and we're looking into this now. This would be great for our viewers as well. I'll bring up a couple bits on the screen. So there's loads of different companies now moving into the agentic AI space, offering basically employees. They're employees, but they're AI. They can do task management. They're specialized in given fields, etc. Lots of companies are offering this, but Sintra is a company that's clearly put a big budget behind a marketing campaign and the infrastructure for the company, and we're looking at them now, and we're going to try and start using some of their agents. So just a high level. So the whole thing that Sintra have done is they've created agents, so AI agents that are specialized in given domains. So let's give an example. So just the headline: Sintra X, the world's first AI-powered assistant powered by your AI brain that can complete tasks for you even while you sleep, all to save your most valuable asset, your time. So they've created these different agents that specialize in, let's say, business development or social media manager, email marketer, personal coach, recruiter, copywriter, e-commerce, financial advisor. They've created these specialist AIs, and you can then train that AI, that agent to operate in your business model with your task management or with your sales approach or your social media scope. And this is the next level of where AI goes. ChatGPT was disruptive. This completely changed the playing field, and it's well worth getting someone in your company. This is for listeners and for you guys as well. If you've not looked at this stuff, get someone to start researching this, because the second you can literally employ these agents, they can act with autonomy around your software management systems, your emails, and or whatever other third parties APIs you use. These things can then just be instructed and start doing all the tasks, or do a load of market data research for you, send a load of emails out, prospect for you, to train up your staff. Like, you can have all kinds of things that these agents can do, just like a staff member can. There's going to be restrictions initially on API permissions and other bits and bobs, but it's inevitable. All these companies are going to start pushing, and it's a race to the bottom of who can make the most autonomous employees for business owners. So worth going to look at Sintra. And there's some other companies that are doing it as well. But this is the next turning point for AI. Don't know if you guys have looked into any stuff with agents yet, guys.
Yeah, we have looked at it as part of an ongoing project at the moment to see uh, about, well, so the guy in my office thinks he can build one himself, but I did actually say when it came out, not because it was quite obvious that there's going to be like, this is a whole business model. There's going to be companies out there that will set these up, which obviously has already happened, and I think it'll just go on from there. You to see the whole new subset of businesses now. There's going to be a lot of it, probably already is, with these consultants as well. They'll go around to see how they're going to help businesses optimize all their flows through these different apps and stuff like that. Because, I mean, if you say it out loud, business owners are good at what they do, and then they work with professionals like, accountants and tax advisors and insurance brokers. Anyway, this will be like another form of broker business. But yeah, we've not implemented them yet.
If you took your business right now, what are like, and you think of what these agents can do, what would be like the first places you would want to employ like one of these sort of autonomous agents?
I think, but there's one problem I have is that I actually like I like working with, I like having people around to have a bit more, what feels like two-way dialogue, so to speak, more rather than, so for us, when we're looking at it and definitely on the radar of it, but more really just for admin stuff, really filing, organizing, uh, cross-referencing all diaries to
What
make
about
sure.
all your sourcing though? Like all your, data scraping, appraising these sites, email marketing?
We already use tools for that, but it all gets initiated by a person, because again, at the moment, we have conversations about things, we set specific criteria and strategies that's done through not to say old fashioned, but our client, for example, the relationship with our client dynamic is face to face. It's our clients aren't all on the internet, where you can optimize ads and optimize the data source and scraping. It just starts with the client, and that's via phone or face to face, and then that information's taken from that individual, who then goes and starts generating some form of activity or lead, and then that the inputs they get from there can then be used by software to streamline whatever activities they need to do. Does that make sense?
Yeah, sure. And what about you, Jack? Anything you can think of in your business?
I was actually chatting to on the investor day. We went for some food, and I was actually chatting to an investor who's definitely probably more AI centric than we are. I find our development company very difficult to put it into like a complete vertical or even like an operational integration system, because everything that we do is so bespoke. It's almost like the value is in us bringing together. Yeah, there's tech involved, and we might have AI involved with bookkeeping management or scheduling management or organizing diaries, or whatever it may be, the easy stuff like that. But it's very difficult to integrate that into our development company. But then a systemized business like our surveying business is very, very different. AI can manage a lot of that and help the automation of lead management, pushing information towards us. So for an example, like let's use prime example. For us to understand how efficient we have been at outputting a survey is really easy to monitor. We can monitor how many hours we were on site, how many hours we were traveling, how much fuel was used, how many hours we were plotting the drawing, and then how many hours we were correcting it. So we've got really rich data of what that costs us. To work out how much a project costs us is almost near on impossible, because our estate manager's gone to pick up a delivery, our project manager's done an hour here, an hour there. We've bought this for the site, done this. So very difficult to automate that process. And I find that AI is really good at things that are repetitious or are easy to predict and manage, so require little thought, but they're very bad at things that require tying in, almost something that's a feeling against something that's like commercial. So yeah, I suppose we're even bringing up Johnny again, he's extremely like immersed in AI, and we talked about different areas that we could have it in our business, and I feel like we're quite well covered so far in those areas. I think that the easiest ways to integrate AI into a business is looking at maybe like the sourcing side and data scraping. You can also obviously have assistance from a personal perspective, so helping you manage your email boxes, helping you pull together text, helping you do grammar checks and things like that. Marketing, I think the way that marketing is going to go in the next decade or two is like authenticity, in the sense that I feel that more people that are posting stuff that are a little bit raw and less predictable via you can see when an ad goes out that's like AI eccentric, it's very predictable. And I think the way marketing is going to go is more like raw, rather than being really well polished. And I think that's going to be the marketing that stands out. I mean, we are, but not, AI is not running a sector in I don't think we've got into a position where AI has replaced an employee similar to Dorian. Like, feel like our team are so well versed in their roles. Like, for an example, our legals, accounts, and finance lady, for her to be an AI bot is almost near on impossible. But
Do you not think it's less of an argument about replacing existing staff, but more about
in
leveraging
addition, oh, for sure, yeah.
so that you don't need another staff? Do you know what I mean?
Correct. Yeah. Yeah. I mean, I always push all of our team. We did a masterclass in our company where I talked through for 2 hours where everyone could integrate AI into their day, in their daily role. Because if everyone in our team is 30% more efficient, that's like having eight more members of staff. So I think a lot of it starts with how they're taught or how they start to integrate it. But yeah, we massively encourage using it.
Well, cool. Hopefully a nice little nugget there for anyone out there. Make sure you're looking at agentic AI. Shout out to Sintra, who've released we've not started using it yet. We're just looking at all the reviews and looking at and studying it and seeing like what could we first use it for. But this is all going to happen the same way that the ChatGPT wave has run through businesses. This is going to be far more disruptive because the net benefit of it is much higher to business owners. But development space is definitely more analog, so maybe difficult for us right now, but we will see. Anyway, good podcast, episode 53. We've fucking done it. We've done over a year worth of this podcast. So thank you everyone who's watched any episodes. We massively appreciate it. Make sure you subscribe and share these episodes with anyone who you think may find them useful. It massively helps us. So appreciate that. Join the Ground Up Network as well if you're in property and you want to get hands-on, you want to get some good feedback from experienced people, then that is what we're offering. Weekly calls, things like that. It's only £100 a month and a 7-day free trial. So try it out and check out the link in the description of this video on YouTube, and you should be able to access it. But big love. See you next week. And awesome, guys. Have a good weekend.
Ground up sound. Ooh, yeah. Real estate deal. We lay